Hi guys, have you noticed something strange about the cryptocurrency market lately? Every day there is good news. Countries are passing crypto-friendly regulations. Major players like Trump and his team are supporting BTC and Ethereum, and institutional investors are buying up assets. But why isn't the price going up? Why haven't we seen the alt season that everyone's been waiting for? Why is the market stuck in an endless sideways movement? Today we'll talk about what's really going on. This isn't just the calm before the storm, it's a fundamental shift in how the market operates. And frankly speaking, if you don't understand these changes, you risk losing your money. But I've prepared a free course for you that will not only help you survive, but also profit in these new conditions. You will learn how to trade against the crowd which constantly loses, and how to align yourself with big capital that sets the rules. In this course, I will show you how to use free tools that will change your trading approach within a month. Join my Telegram channel and the bot will send you an access to the course. The link in the description. Let's start with the obvious question: why isn't crypto growing despite all the positive news? Trump and his team are heavily involved in pushing cryptocurrency. Donald Trump has created a task force to explore the possibility to establish Bitcoin reserves. His administration, including key figures like David Sachs and Cynthia Lummis, are openly promoting cryptocurrencies. This is a huge step toward legitimizing crypto on a global scale. Moreover, countries around the world are rolling out regulations that integrate cryptocurrencies in their financial systems. These aren't just words, there are real actions behind them that should, in theory, stimulate real growth in the market. And finally, institutional players are also getting in on the action. For example, War Liberty Financial is buying up Ethereum, and Joe Lubin, co-founder of Consensus, announced that Trump's team plans to launch a business on the Ethereum and Bitcoin blockchains. Even funding rates are declining, which usually signals a healthy market and growth. What's going on? The answer is the following. The market is going through an unprecedented influx of institutional capital. But for this capital to fully deploy, it takes time. This is known as the accumulation phase. Here is how it works. First, we have the liquidation of weak hands. Big players aren't interested in driving the price up just yet. Their goal is to shake out retail traders who panic at the slightest market movements. To do this, they create artificial volatility, forcing weak hands to sell their assets at low prices. We see the creation of panic. When the market moves sideways for a long period of time, people start to doubt. They think crypto will never grow again, and they sell off their positions. This is exactly what big players want to scoop up liquidity from retail investors. Finally, there are macro factors. For instance, Trump's introduction of tariffs could be part of a larger strategy. It creates uncertainty, which puts pressure on the market and causes weak hands to sell. Let's talk about how this affects you. If you continue trading the way you have, you risk being one of the many who gets shaken out. But if you understand what's happening, you can use it to your advantage. First, don't listen to the crowd. The crowd is emotional and often wrong. When everyone is shouting that crypto is dead, that's precisely the time to pay attention and prepare for opportunity. Second, follow the smart money. Big players always leave traces. For example, large purchases on exchanges, shifts in open interest, or exchanging trading volume. All of these are signals you can see. Third, prepare yourself for growth. This sideways market isn't the end, it's a build-up to the next big move. When weak hands are shaken out, organic growth will follow. So, what can we expect in the near future? First, we're likely to see a prolonged sideways market. The market could remain in this phase for several or more months. This is normal and even necessary for accumulation. When big players finally decide to move the market, we'll see sharp price jumps and swings. Finally, there will be organic growth, and after the accumulation phase is complete, a real bull trend will begin. But remember, in order to profit from this, you need to be prepared. You need to understand how the market works and avoid reacting emotionally. That's why I created a free course. In it, I will explain in detail how to use free tools to analyze the market, how to spot smart money movements, and how to trade without getting caught up in emotional decisions. This course will teach you how to transform your trading approach in just 1 month. Don't miss this opportunity. Follow the link in the description to join my Telegram channel and get the course for free. Now let's dive deeper into some of the key concepts we are touching on. We are at accumulation phase. This is the phase where big players or smart money start building their positions quietly. They don't want to raise prices too early, as that would alert the retail traders and drive up market early. Instead, they create a period of low volatility which shakes out weak hands, creating the liquidity necessary for them to accumulate assets at a lower price. By the way, check this strategy breakdown in my Telegram channel. It's about the Wyckoff method that is extremely relevant now. By knowing this principle will help you to stay confident and see the coins with potential of growth. Next thing, market manipulation and retail behavior. During this phase, you will often see the market move in ways that seem unpredictable. This is deliberate. Big players manipulate the market to trigger panic, selling from retail traders, taking advantage of their emotional responses. Smart money strategies. Big institutions have access to more information and better tools than the average retail trader. They use this to their advantage by timing their trades based on liquidity, using strategies like algorithmic trading to buy assets at lower possible prices. By the way, guys, talking about smart money, some of these setups I share in my Telegram channel as well for free, and you can track them and earn on that. You can check the history of my results on this strategy. Link in the description. So understanding these dynamics is critical for surviving and thriving the current market environment. You can't rely on the same strategies that worked during the last bull run. Instead, you need to adopt long-term mindset, focusing on accumulation and risk management. One of the biggest challenges in trading is overcoming your own emotions. The market fuel is fear and greed, and understanding these emotions is key to staying in the game. When you see the market moving sideways for months, it's easy to get frustrated or even bored. Many traders fall into the trap of making impulsive decisions, whether it's selling out or fear or over-leveraging in hopes of catching a quick profit. But this is exactly what smart money wants you to do. They rely on retail traders making emotional decisions to create the liquidity they really need. To avoid this, you need to develop a disciplined trading mindset. This means sticking to your strategy regardless of short-term market movements and focusing on long-term gains. In summary, what we are seeing in the crypto market right now is not the end, it's the beginning of a new phase. The market is preparing for a major move, and those who understand this will be able to profit. Don't listen to those who say crypto is dead, listen to those who understand the mechanics of the market. And if you want to be one of those people, start by joining my free course. Follow the link to my Telegram channel and let's take your trading to the next level. See you soon.